So I hope you can hear me. So yeah, um, I'm just going to show you what gold is doing overall long term. So let's remove this. Okay, now I want you to look closely. So if you look, you can see gold has been on this massive bullish run. So now we are just trying to find out if gold is going to keep moving up or if it's going to keep coming down like this. Okay, so now to find out how this is going to work, let's see. So let's just see what happens. Let's analyze this together. So so now we know gold has been on this bullish run and we have this level here, this level being the second engulfing candle level. So if gold breaks this level, we know that, and engulfs totally, we know that this is going to be a continuation to the downside. Now if you look at it closely, you can see that gold didn't break below. So since gold didn't break below this level, so there is 100%, no, not like 100% though, so there is, let's say, a 70% chance that gold is going to like continue to the upside. So nothing is 100 in FX, you always take your losses. So yeah, so we have a rejection here at the second level, and if we go over to the weekly, then we can see what gold is doing. And if you look at this, you can see we have this breakout, then we have this retest, we have this buy breakout, we have this retest, then we have this buy breakouts. Yeah, so my breakout is usually at the week. So yeah, so this is so let's see how the breakout at the week and at the body of the candle, so you can get to understand what I'm doing. So we've seen remember, this is the second engulfing level on monthly. We've seen this kind of setup before here. Look at it, you can see that rejection on the second level. When I mean second level engulfing, I mean when there are two engulfing candles, that market needs to engulf but does not engulf it. Yeah, so that's what we call the two candle engulfing, second level engulfing candle. We have the same thing here, if I'm not mistaken. We have the same thing here, you can see. Then we have the same thing, okay, we have the same thing here. So literally that's just how this shit works. So now let's go. So we have a breakout here, and after the breakout, what the price do? Price came to retest. So breakout, breakouts, then retest, then continuation. Now our target, our weekly target is supposed to be here. Candle wicks, that's our weekly target. That's our weekly target. But then this is that same level, and this same level is the second level, or is the second structural level. This first structural level, second structural level, you can see the rejection, then the buy. So here is still going to act as a support when price comes back to this level. So we might not get here, but let's just see what happens. Now if we go over to the on the weekly, you can see on the weekly, on the monthly, it has not confirmed this sell yet. It only confirms this sell when gold takes out this second engulfing level, the graph. So since this second engulfing level hasn't been taken out, this has not been confirmed as a sell on monthly yet. But on weekly, if you look at weekly, you can see that gold has broken out the first structure on weekly, and it went straight to the second structure on weekly. Now it rejected on the second structure of weekly and bounced back to retest the first structure on the weekly. Now since it has retested its first structure on weekly, the target will not be what the low that created the what retest. Why? Because this low becomes a weak low. Why? Because it does not break any structure, you get. So since this low does not break any structure to the upside, it just went for a retest of the structure broken now. This level becomes a what? A weak low, and therefore this level is a targeted level. So next thing, okay, so we know that is a targeted level, right? Next thing, and we know that weekly is selling to the downside. Weekly is in a bear market. So now when we look at the daily, it kind of gives a much more different vibe when in comparison to the weekly. Let me just show you. So look at, so this is a sell, a buy, a sell, a buy, a sell. So this becomes the new low. Now I want you to just look at, now this becomes the new low. So this becomes the new low. Since this is now your new low, what happened? We had price sell. We had a sell back down. We had a sell back down here, and we had a rejection. So with this rejection, it shows that price could potentially go up. So since there is a rejection there, the highest point here was this high. So price went back up like this. So this structure you're seeing, this overall structure here, is just a mini structure, because this is the major structure. A retest here and a buy. So if price breaks this mini structure, where does it go to next? The major structure, which is this one here. So what does price do? It breaks this mini structure to the upside, then retested and came down to break the major structure. Now the major structure on daily has been broken. You can see it. Now since the major structure on daily has been broken, where is the second structure on the daily? The second structure on the daily still falls exactly at that monthly second level engulfing weekly structural second structural level, and now it falls as daily structure second structural level. So then we have this mini structure breakout like this, guys. Sir, okay, we have the second structural level break, we have the structural level rejection, then we have this mini structural break like this, you can see. Then we had a retest of that structure break, we had a continuation, we have low, we have a high, then we had a breakout in here. So on this breakout in here, we know that the next target is what? The next target is this next mini structure low. So that is why we are targeting this level. So that is why we are in a sell. Why that is why market is still in a sell graph. So you have this breakout here, then we have this breakout again, right? Look at it, you can see breakout. This becomes the new high. This becomes the new high, and our target should be here. So you can see our price rejected that level and don't, right? Now we have a breakout here, so we can have price push up to this level, we can have price push up to this level like this, then we dump right to the downside. So daily is still showing bearishness. So okay, so daily is still showing bearishness now. This level,
you talk to yourself, or you don't create small
at the video,
let it create small
at the record.
Okay.
This level is an insignificant level because this level didn't break any structure. This is like a mini structure break, so this level is not really, does not really matter. So this is the level that matters. But assuming price broke to the upside, then we would have had a continuation to the upside, but since price didn't break this level, sold back down, so we might have a buy to the upside, then a drop off. Now remember, this is our target. Why? Because this is the weaker level formed, and this is the monthly, weekly, and daily second level. So in order to know where this price, whether this price is going to keep going up, you have to look for your breakout on lower time frames. So on H4 we have this is we have the breakout here, right? And so just like I said, this level is not really important. Why? Because this level broke no structure or has no structural significance. So yeah. So obviously we are having a bar ready. So obviously we are having a bar ready. Why? Because this was H1's breakout here. Then we have the high, which was here. Right. So you can see we have price forming what a retest before continuing to the upside. You get it. So obviously we're going up. So let's just remove this and see why gold, where gold reacts from. So I'm just going to show you how to pick key levels that we look out for. Key levels we should look out for. This is a, excuse me, this is a weekly key level. This is a weekly key level. This was the daily key level, and this was another daily key level. This was another key level. This was another key level. Here is another key level. Here as well. The next key level here, this one here. We have this key level here. So you can see that clearly, and then we have this daily key level here. So overall, if gold doesn't break this level to the upside, if it doesn't break this level, then we are still in a downtrend. If gold doesn't break this level, we are still in a downtrend. So downtrend we are in. So right now we are going to watch out to see if price keeps buying to the upside. So yeah. This is an H4 key level, so watch out for this. But right now we are going to see some retracements. So you might see some retracements. So keep your eyes open. eyes open, guys. You see some retracement to the upside. Yeah. So I can also show you my weird account. So this is one entry. How did you get this entry? Just go over to M30. While you're at M30, you can see the clean structure breakout here to the upside. Then you can see the second structure. You can see these breakouts here. Right, this becomes a breakout here, and this is the second breakout. This is the breakout that we're waiting for. So price broke this level and breakout came for retracement. We have M30 level, H4 level, which is this level. This level here. And you can just see we had this M30, and hope that's it. Then now that we've broken H1 and M30, we are going forwards H4, which is this level. Now we'll get a retracement to this level. Price showing this already a retracement, but I don't really trust this much. Then if you look at M30 again, you can still see that there was a breakout here, but price never came for a retest. Now price is coming for a retest, so now come back to this level before buying to the upside. So there might be something like this, like confirmation. Might be to the side. So the retest, then continue. So yeah, the retest after this breakout, 1, 2, we have a retest now, then a continuation to H4. So that's how this goes. That's just for. So we're expecting a buy to the upside before to sell down. Yeah.